First Solar reported earnings after the market closed on Tuesday, and results were okay. Guidance was also okay. This is one of those companies that it looks like First Solar is moving in the right direction in a lot of different ways. The revenue continues to grow as they expand capacity. Right now, the price to earnings multiple based on 2025 guidance, a little under 9. So that seems like the stock is also cheap. So you're getting a little bit of growth, you're getting a lot of value. There are devils in the details with First Solar, so I want to dig through some of those things today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start by looking at the stock chart. You can see that today shares are up about 9.3%. So pretty solid day. They were actually a little bit higher than that. Peaked at about 167 for the year, only up about 11%, but you pull back a little bit, 252% gain over the past 5 years. So pretty solid run here for First Solar. But let's look at their quarterly report, and I'm going to start with this before going to the presentation. Net sales for the full year, $4.2 billion and $1.5 billion for the first quarter. Net income, $12.02 and $3.65 for the quarter. Net cash balance, $1.2 billion. First Solar's always had a really good balance sheet, but keep in mind, First Solar is about a $17 billion market cap. That will become pertinent as I go through some of these numbers. First of all, let's go through the quarter, and this gives a few more details. Gross profit, 37.5%. That was down from both a quarter ago and from a year ago. So just keep in mind those margins might be coming down just a little bit. They are pretty volatile over time, so don't get freaked out about one quarter, but just want to keep an eye on that in the future. Operating income, $457 million. For next year, they're expecting revenue to be up to $5.3 to $5.8 billion, so a nice amount of growth, and that's as they bring on some of their capacity that they've been building. Gross margin, $2.45 to $2.75 billion, and operating income of $1.95 to $2.3 billion. All that looks really good, right? But then look at this one little caveat at the bottom. This guidance is based on the assumption that they're going to get $1.65 to $1.7 billion in Section 45X tax credits. That is part of the Inflation Reduction Act that was passed under the Biden administration. Some of those subsidies have come under pressure already under the Trump administration. Now, it would take an act of Congress to actually change the rules here and pull away some or all of these subsidies. But keep in mind that $1.65 to $1.7 billion of the company's $1.95 to $2.3 billion of operating income is from these tax credits. First Solar very, very quickly goes to almost not being profitable on an operating income basis without these tax credits. So they're extremely important for the company's business and for the valuation. So when I go back to earlier, I said that the stock is trading for about 9 times earnings. That looks pretty cheap, right? Unless you take away these tax credits, then it starts to look much more expensive. So just something to keep in mind, because subsidies really drive First Solar a lot more than I think a lot of investors think. The other thing that's a red flag, and this is something I'm a little bit surprised the market isn't more concerned over, is the fact that bookings have been going down, what they call their expected module volume sold. They've been a little bit more conservative with what they're calling bookings. I'll get to that in just a second. But 78.3 gigawatts of expected volume at the end of 2023. You go through what was sold in 2024, 14.1 gigawatts. Net bookings just 4.4. So you're not replacing what you were actually selling. This is at the same time you're expanding your capacity. So the end of 2024, 68.5 gigawatts, and now just a little bit added in the first couple months of the year. Still at about 68.6 gigawatts of total bookings. So this is not trending in the right direction. First Solar is adding capacity at the same time that their total bookings are going down. Now, if you look at their total booking opportunities, this is something they report each quarter, say that their total booking opportunities in North America, 70.3 gigawatts. Look at how concentrated the company is now in North America. This is largely because of those tax credits. So you have production tax credits and other tax credits and savings, even for developers, that are related to product that's being made in the US. First Solar, by far the largest solar manufacturer in the US, so they're a huge beneficiary. That helps their backlog, but it shows you that they're not really all that competitive in India and Europe, where there's also growing sources of demand. You don't even see Asia and China in here because that's going to be dominated by crystalline silicon panels. that are much lower cost and actually more efficient. The late stage opportunities, so these are opportunities that may actually become bookings relatively quickly, 21 gigawatts in total. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, one of the things that management is arguing is, hey, we're going to need more capacity, especially in the US. So what can you actually build in the next couple of years? Well, solar is going to be available almost immediately. Same thing with new utility energy storage. So that's going to be something that's going to be paired with solar often. It's going to take a while to build new natural gas plants or new nuclear plants. May even take longer than into 2030. So that is something to keep in mind, is if there's an increase in demand for electricity in the US, First Solar should be one of the beneficiaries, but we have not seen that, especially with the booking side of things. Also, their price assumptions, not all that impressive. Their current sales are at about 29.9 cents per watt, I believe is what it was for the fourth quarter. So that's staying about consistent, and their cost per watt is about 20 cents per watt. So you're going to have reasonable margins, but not phenomenal margins. And again, the big question for First Solar is what happens to those tax credits? Do we see those tax credits go away in 2025 or 2026? That would be a massive blow to the company. I think we'll start to see some pressure as some other companies start to bring capacity online in the US over the next couple of years. This is typically what happens when you have big subsidies like this, because there starts to be supply that starts to flood into the market and other manufacturers that flood into the market. We're seeing that with batteries. We're going to see the same thing with solar energy. So even the profitability that we see today probably isn't going to be here forever. So decent quarter for First Solar. And on the surface, it looks like everything is going in the right direction. But dig underneath a little bit and you see that bookings is a little bit more challenged than you would like to see. And also those subsidies are something the company massively relies on. This is not a company that trades for 9 times earnings without those subsidies. Much, much bigger earnings multiple if those were taken away. So keep those risks in mind. This is one of the reasons that I'm not as bullish on First Solar at this point and currently at this price, is just the reliance that they have on those subsidies and the fact that that backlog is dropping. I think the economics of the business are probably going to get worse over the next few years, despite the fact that the solar industry continues to grow. There's always an ebb and flow in solar where the value is created, where you're actually able to increase prices or increase volumes. First Solar has been riding a positive wave over the last few years. I think going to be many more headwinds over the next few years. But let me know what you think about the earnings report. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.